Hey everyone! Welcome to the XRP market analysis for the 1st of May 2026. Let's see what's been happening today, shall we? Oh, before we start, this video is based on an AI-generated report, so please use it as reference only. And remember, investing is always your own responsibility. So here's where we stand today. XRP is currently trading at $1.3706, and it's down just a tiny bit, about 0.07% over the past 24 hours. Now this is interesting. While the daily movement is pretty flat, the weekly picture shows a 4.2% decline. You know what I've noticed? XRP ETFs are seeing some serious outflows, about $23.9 million in total. That's not great news for short-term sentiment, but it might create some buying opportunities for patient investors. Let's dive into the technical stuff, shall we? The RSI is sitting at 43.88, which puts us in that neutral to slightly oversold territory. Here's the thing, that's actually not too bad. The MACD is still positive at 0.0030, but it's showing some weakness with that negative histogram at minus 0.0069. The price is trading near the lower Bollinger band at $1.3329, and it's struggling a bit to get back above that 20-day moving average at $1.4048. The 200-day moving average shows we're about 24% below the long-term trend. Mixed signals, but nothing too scary. Now, looking at the bigger picture globally, the Bank of England kept their rates steady at 3.75%, which is creating some stability in monetary policy. But here's what's interesting. Bitcoin ETFs have seen nearly $500 million in outflows. That Fed policy is really cooling down the crypto markets. XRP has a negative correlation with the dollar index at minus 0.2000. So when the dollar gets stronger, XRP tends to weaken. It's also showing negative correlations with traditional markets, like the S&P 500, which tells us crypto is still dancing to its own beat sometimes. On the regulatory side, well, there's some political noise with Senate Democrats writing letters about prediction markets, but nothing directly hitting XRP. Actually, the news is pretty positive. Major banks like BBVA, DBS, and DZ Bank are building on the XRP ledger. That's huge for institutional adoption. Plus, Ripple's CEO announced expansion into the UAE, which strengthens their Middle East presence. You know what I've noticed? While politicians make noise, real businesses keep building. Huh? The Fear and Greed Index is at 29. That's extreme fear territory. This actually makes me a bit optimistic, believe it or not. When everyone's scared, that's often when the best opportunities show up. XRP ETFs are still seeing outflows, with XXRP losing $9.8 million and XRPT dropping $5.3 million. But here's the thing about extreme fear. It doesn't last forever, and smart money often starts accumulating when others are running away. Now this is really interesting. Whale transactions hit 433 trades, involving 438, 945, 741, 730 XRP. That's 99.9% of total transaction volume. So while retail might be scared, the big players are definitely active and repositioning. Total transactions reached 8,698, which shows the network is still very much alive and kicking. When whales are moving this much volume, something's usually brewing. Looking at the Elliott Wave analysis, we're positioned in Wave C corrective phase. The Wyckoff analysis suggests we're in distribution phase A with 46% confidence. Now, while that sounds a bit concerning, distribution phases don't last forever. Once this Wave C correction completes, we could see a new upward cycle beginning. The timing is uncertain, but the pattern suggests we might be closer to a bottom than a top. Here comes the exciting part, the AI predictions. The short term looks pretty promising, actually. The one-day prediction targets $1.5374 with a 55.3% upward probability. That's a nice potential bounce. The 7-day prediction shows $1.4920, and the 30-day sits at $1.4586. So we're looking at a potential short-term bounce followed by some gradual cooling. The probabilities hover around 50 to 55%, which means high uncertainty, but slight bullish bias for the near term. Now let's talk about the risks, because, well, we have to be honest about these things. The biggest worry is if that $1.35 support level breaks. That could get messy. Those persistent ETF outflows of $23.9 million are concerning for institutional confidence. Fed policy changes keep hitting risk assets, and with the Fear and Greed Index at 29, sentiment is pretty rough. Plus, if Bitcoin weakens significantly, XRP might follow along for the ride. The dollar's strength is also creating headwinds with that negative correlation. So here's my overall take. And remember, I'm just looking at AI data here, not giving professional advice. The recommendation is hold or wait for better entry. If you're looking to buy, watch for the $1.32 to $1.35 range for entry after we see support confirmation. Set your stop loss at $1.28 in case that major support breaks. For targets, I'm looking at $1.48 first, near that 20-day moving average, and then $1.55 for the second target, which aligns with the AI's short-term prediction. The key here is patience. Let the market show its hand before making big moves. And that's it for today's analysis. If this was helpful, please subscribe and hit that like button. See you next time.